Yeah, all right. Let's break down this trade over here. Just to explain to you guys why and how I took this trade. Basically, what I usually use is three time frames: the 15-minute, the 5 minute, and the 1 minute. The 15-minute time frame is what I use for basically to get my direction. I don't use any bias with this. I use the fair value gaps on the 15-minute, 5 minute, and 1 minute. For example, this 15-minute here, the far left screen, 15 minutes. Once I see rejection off of a 15-minute BISI, buy side imbalance, sell side inefficiency, basically a 15-minute fair value gap. Once I see a rejection, just like you see here with these three candles forming a huge wicks to the upside, and then I look for confirmation to that a displacement on the 5 minute. As you can see here, price has clearly, with a lot of energy, traded up, taken out the swing high, the most recent swing high, and it closes above the most recent swing high. And then what I do is I jump onto the 1 minute, and then I look for fair value gaps over there on the 1 minute, 1 minute basis. And as you can see, this big fat 1 minute fair value gap here. I should have taken it there. I did not. I wanted to wait for more confirmation. And then there was another one up there, which is not marked out here. If you look above it, right over around here, and then if you go even higher, that's where the one I took, the marked out fair value gap over there. Price kind of consolidated around over there. Once I saw rejection over there, that's when I went into the trade. Normally, I would enter inside the fair value gap. Sometimes I like to wait for some kind of rejection on the 1 minute candle. My initial take profit was up there, but then I noticed this 1 minute SIBI, which is a sell side imbalance, buy side inefficiency, a 1 minute fair value gap. So normally price would bounce off that, drop down again, maybe even go down to that first fair value gap, and then trade back up again. Due to the time of the day, I wanted to get out as soon as possible, so I brought down my take profit down at the lower half of that fair value gap. In this case, it works as a SIBI. I do expect price to trade all the way up to that initial balance high, that green line up there, but I'm content with taking just this portion here. So basically, this is how I use the 15-minute, the 5 minute, and 1 minute with no bias whatsoever. And let's watch the price get to the take profit. Do go on later after this trade. Go on onto the same chart. This is, by the way, E-mini gold futures. Go on to the charts and see what happens later. I do expect price to go all the way up to that initial imbalance high, maybe even go higher to get to the equilibrium, which is the midpoint of the dealing range, the daily dealing range. It's 50%. If you take a fib, you measure the 50% of the dealing range. That's where I expect it to be. It may get there today, maybe tomorrow, maybe tonight. So do check out the charts afterwards. It's just to confirm that price is actually, in fact, heading up there.